Hi, Mr. Mortgage here. I must report on Charles Beerman, President and CEO of Trim Tabs. That used to be a really well-respected company. Great data, great analytics, forward thinking. He came on the closing bell with Maria Bartiromo and Dylan Radigan on Tuesday at 3:52 p.m. Eastern. You can find the clip if you go onto CNBC's website. He said there's a tremendous amount of buying of foreclosed homes. Foreclosures will all be history in June. All the foreclosures will not exist. Banks that have taken a 70% write-down on their prime portfolios will get to write them back and take profits on them. And in California, there are a huge amount of foreclosure sales, so many of them, that he's getting outbid. It's not true. He's either absolutely lying to the American public, using CNBC as a vehicle to do so, or he's senile. I have the real data from the Public Records Office. It is what it is. I'm going to give you that data, but before I do that, I'm going to play Beerman right here.
What's most important to us is we're seeing a pickup in the economy, a pickup in after-tax income for people on salaries. We think that the job market's turned around. We expect to see decent job number growth. We're estimating 44,000 for March. And more important, we're seeing a tremendous amount of buying of foreclosed properties all around the country. And apparently the banks are willing to cut prices 40–50% to move the homes. And we think that the current rate of sales that the foreclosed homes, not condos and not South Florida, will be history by June. So all the foreclosures that everybody's been worried about will not exist. And the banks who have taken 70% write-downs on their prime will actually have profits because they're experiencing a 50% loss.
What of the bear case, though, that the home equity situation in this country is a diminishing one right now, has been for a while, that the overall capacity for the consumer to consume and expand consumption is diminished, if not...
Yeah, but that's a bogus argument for the main fact.
Why do you think that?
Because the U.S. consumer is incredibly strong in terms of cash flow. Consumer credit has not been growing that fast. Yes, home equity loans have been growing, but consumer credit is not a big factor. Take-home pay is growing. Take-home pay, the growth in take-home pay is more important than a decline in home equity values. Cash outs are non-existent right now. They haven't been for 6 months. So the fact that that's not happening is not news anymore.
You also believe that the fourth quarter of this year, just to skip forward to the high retail season, if you will, sets up very nicely because the comparisons to pre-subprime will be gone at that point.
Correct. We expect to see a very strong fourth quarter of the year. And we're also, don't forget that the Treasury is going to be giving a $100 billion handout to taxpayers starting next month. So things are getting better, and you know, we turned bullish 2 weeks ago. We at the end of October, and we've been bearish.
You turned bullish.
And the only
you turned bullish 2 weeks ago, Charles. That tells the whole story right there. First of all, home equity lines aren't picking up. They don't exist any longer to any great degree. Banks aren't doing them. There's no stated income. You might be able to get them to 80% loan to value, but nothing like they used to go to 100 or 90 or even 85. Banks didn't write down their prime mortgages to 70% either. That's just a fallacy. It's wrong. It just doesn't exist. It never happened. It never will happen. They haven't even written down subprime to 70% yet. Okay, real data from foreclosureradar.com. www.foreclosureradar.com. They are the preeminent foreclosure information service provider, and right now only in the state of California, but their information is the fresh and best out there. Homeowners aren't the only party to foreclosure under pressure. This month, 98% of home auctions went back to the lender after receiving no bids, despite the significant discounts being offered by lenders at auction. Of the 19,821 homes that went to public auction, 13,950 were discounted with an average opening bid of 16%. Of that, 4,624 had discounts of 30% or more. Now keep in mind, the majority of these are discounted from the amount owed. Example, if you have 80% first mortgage made in the last 2 or 3 years, you're likely the opening bids are likely 50 to 70% lower than the value of the property. So, those are the real numbers. What Charles Beerman was likely talking about with his foreclosure auctions were companies such as the REDC Group. That's www.redcgroup.com. They're large aggregators who sell REO property. That's real estate owned by banks, not foreclosures. The banks buy them back, they stick them in inventory, then REDC maybe gets 3 to 5% of their inventory, and they hold big, huge auctions in a geographical region that might have 1,000 homes in it. And they do a pretty good job because they are discounted 50 to 70%. And if you go in there, there are people bidding, and it's pretty exciting, and it's a great way to turn inventory. However, what we've noticed in the state of California is, of the 3 groups, that's notice of default, foreclosure, and bank-owned, which is REO, 65 to 70% of all of the new transactions coming through right now are notices of default. That means people are just getting 90 days late right now, which means the foreclosure wave hasn't even hit yet, and we're going into summer months when inventory is going to grow. This is a wipeout. He's wrong. It's just the opposite. Things this month in March have never, or in April rather, have never been worse, and it's getting worse every month. Don't believe the hype.